All right, so this is chapter 15. And so in chapters 15 and 16, we are going to talk about different types of costing methods. So chapter 15 is job costing, chapter 16 is process costing. And so as a company, we're going to have to pick one or the other. And generally it's not something that we actually sit down and have a discussion about. Depending on what your product is, it's going to kind of determine what you use. And so, like, for example, in chapter 15 in job costing is when you have a unique, identifiable product where when you're making it, you can identify all those costs that go into it. For example, in our chapter 14 problem, we talked about picnic tables. So if you make, custom picnic tables, as you're building them, you can probably easily assign, I use this much, wood for this job. I use this much, we had our craftsmen put in this much time on this job. So it's easy to say, hey, we built a special picnic table, and we know exactly what the costs are that went into it. Another example would be like when you go to the mechanics to get your car fixed. When you get the bill back, you look at it and go, oh, okay, well, they billed me this much for materials, they billed me this much for time, and then they applied usually some overhead to it. And so that's going to be a job costing, because when you brought your car in, they can identify everything they put into that job. Conversely, with process costing, that's going to be something where you really can't identify one unit from another. So that's going to be something like a dairy. So you're producing milk. You can't really look at 1 gallon of milk that went to one store versus another gallon and really differentiate the two. So with that one, you use a process costing where you kind of lump stuff together in batches type of thing. But we'll get into that more on the next chapter. So chapter 15 is job costing. And so what we're going to do is we're going to identify each job that we're going to do and then collect the cost within that. And so the way we do that is we have a job cost sheet. So that allows us to add in, hey, how much materials did we use? How much labor did we use? How much overhead? And so on. So we'll just go ahead and jump into problem 15-1. So in this we have Marcelino Company. So it gives us our inventory. So we have a March 31st inventory, raw materials of 80,000. Raw materials in April gives us the balance. Raw material purchases, not a balance, but a purchases in April. Factory overhead payroll cost in April. It gives us our indirect material cost. Other various costs, we'll get to each one of these. And then it tells us we have a predetermined overhead rate of 50% of direct labor cost. So just tuck that away. That'll be important as we come back to it. Then it gives us some information here. So we have 3 jobs. We have jobs 306, 7, and 8. And it tells us, hey, how much cost were involved in those jobs. So at the end of March, so we have jobs 306 and 307. They were working on in March but didn't finish. And then job 308, they didn't start till April, but they also didn't finish it at the end of April. And so the first thing it wants us to do is determine the total of each production cost incurred in April, and the total cost assigned to each job, including the balances on March 31st. So we're going to go over here to our job cost sheet, and so we have jobs 306, 307, 308, and we're just going to fill out our costs. So first we're going to plug in the costs from the prior month, and so those are right here. So not a whole lot of thinking, we just plug them in. So 29,000, 20,000, and 10,000 for job 306. Job 307, we have 35 for direct materials, 18,000 for direct labor, and 9,000 for applied overhead. Not too bad. So now we're going to go on and plug in the cost for April, and so those, they give it to us down here. So 135,000. Let's do all these. 85,000 of direct labor. Job 307, 220,000, and 150 for direct labor. Now we start working on job 308, so 100,000 of materials and 105 for labor. But we have question marks for applied overhead. And so it told us up here above, it says the predetermined overhead rate was 50% of direct labor cost. And so the way overhead works is you're going to sit down when you put together your budget at the first of the year, and you're going to come up with two estimates. You're going to come up with, hey, how much overhead are we going to incur during this entire year, and how many products are we going to sell? So what we're going to do is we're going to guess, okay, maybe the number is $1 million worth of overhead that we're going to spend on, nuts and bolts and cleaning supplies and stuff like that. And then we're going to sell, so many units. Or in this case, so what we're doing is like, hey, if we're going to have $1 million or so, that's not the number in this problem, that's just an example. If we're going to have, if we're going to estimate so much overhead, we need to take that overhead, we need to apply it to each one of our, if we're doing picnic tables still, we have to apply that overhead to the picnic tables. However, when we start selling and building these picnic tables in January, we don't know what the total overhead cost is going to be throughout the year. So what we do is we figure out a way to estimate and apply that overhead to each one of the products. And so normally what you do is you figure out, hey, what is our driver of overhead? Like, what is something that happens that causes us to incur overhead? So in this situation, what they're doing is they're linking overhead to direct labor cost. And all they're saying by that is they're saying, hey, the more labor that we put into a product, probably the more overhead it's going to use. And there's no right or wrong answer for that. That's just going to be a company decision. You're just trying to make the best guess, the way to apply, hey, how much, nuts and bolts and cleaning solution, are going to be applicable to each job. And so what you do is you estimate the overhead, and then you figure out a driver. So in this situation, they figured that, hey, roughly our overhead that's going to be applied is going to be half of the labor cost. So what we do is we take our labor cost and multiply it times 50%. And so we can just drag that across. And so, for example, in job 306, we may or may not have actually incurred $42,500 of overhead, but that's our best guess at this point in time. So how this is going to work is what we're going to do is we're going to have this account called factory overhead. And think of factory overhead as a bucket. And so as we go along and we're buying these nuts and bolts, so we go to the store, we buy nuts and bolts, we spend $10,000. That $10,000 is going to go into our factory overhead account. And we buy cleaning supplies, and that's going to be added to our bucket of factory overhead. Then what we do is we go in and we actually build a picnic table. Then we take some of that money out of the factory overhead accounts, we take it out of the bucket, and we put it into our work in process or our finished goods account. So we're just using an overhead account as a kind of a holding or a temporary account. And at the end of the year, we want that to be zero. And chances are it's not going to be zero at the end of the year, because we estimated what we think our overhead is going to be, but that chances are we aren't going to hit it perfectly. So that's fine. That's not a big deal. What we'll do is we'll just make, at the end of the year, we'll just make a little bit of an adjustment. And so we'll get to that later on in the problem. But at least for part one, we're done. So we actually figured out, okay, so our total cost of each one of these products as of the end of April are down here. And so jobs 306, 307 we finished. That's the total cost of the job. 308 is not finished. We'll probably finish that one up next month. So that's going to flow over into our beginning balance when we do our May job sheet. Excuse me. All right, so the next one is it wants us to prepare journal entries for the month to record all these transactions. So let's go down here. And so we have our transactions. We have A through J. So I already labeled those. And I went ahead and I already labeled our accounts that we're going to do just so we can make it a little bit quicker here. So the first thing happens is we have material purchases on credit. So if we go back at the top, it says, so we're talking about April here is what we're doing. So raw materials purchased in April are $500,000. So that means we increase our raw materials inventory by $500,000, and we bought it on credit, so we credit accounts payable. All right, so our work in process, let's see. Direct materials used in production. And so here we're going to go to our schedule. And so in April, our direct materials used, or these jobs, is at $455,000. So we increase our work in process. And when we use materials, that means it comes out of our our raw materials inventory account. Right, and C, direct labor paid and assigned to work in process inventory. And so that's going to be direct labor that we used right here. So that's going to be 340. So the indirect labor paid and assigned to factory overhead. And so this is what we're filling up our bucket. So we actually paid out, it's the indirect labor paid and assigned to factory. So we have to figure out how much that is. So indirect labor, $23,000. That's going to be right here. So we paid salaries, and so we're going to put that into our overhead account, and we'll apply it later to our job. All right, in part E, overhead cost applied to work in process. So now we have work in process that we're actually going to take out of our bucket and apply it to our work in process inventory. And so that is going to be right here. So that's going to be our $170,000. So part F, actual overhead cost incurred, including direct materials, factory rent, utilities, are paid in cash. And so, okay, so indirect materials are $50,000. So those are paid out, so that increases our overhead. And it's going to come out of our raw materials. And so factory utilities are $19,000. And we paid cash for those. Sorry, my dog came in. I had to pet her. All right, so the next one here is our factory rent of $32,000. Oh, so that's actually gonna be. Let's skip that down. This one is depreciation. So how much depreciation did we have here? So okay, depreciation 51,000. So that's going to increase our overhead bucket. All right, now so part G says transfer of jobs 306 and 307 to finished goods. So those jobs were actually finished during the year. And so the total cost of jobs 306 and 307, that's going to be $828,500. And then H, so cost of goods sold for job 306. So we sold. So it looks like we finished jobs 306 and 307. We sold 306, and 307 is still sitting in inventory. And then job 308, we still haven't finished yet. And so the cost was $321,500. So that was our cost of the goods sold. And we need to book our revenue. And let's see, how much did we sell the job for? So we sold it for $635,000. So we got cash for that in sales. Pardon me. And so then the last one says assignment of any under or over applied overhead. So earlier when we were talking about our overhead bucket, we estimated how much money is going to be in that bucket, and we applied that to the jobs. But chances are we're probably a little bit off. Maybe we took too much out of the bucket, or maybe there's some left. So what we need to do is we need to, if there's some left over, we need to apply that to cost of goods sold, or if we took too much out of the bucket, we need to reduce cost of goods sold. So to do that, let's just go over here off to the side. And so I'll just do added to overhead. So these are things that we actually increased our overhead, so we filled up our bucket. So that's going to be all our debits to factory overhead. So that's going to be $23,000. We debited here for $50,000, and then here for $19,000. Here again for $51,000, and here again for $32,000. And subtract. So what we took out of the bucket, what we actually applied to our goods, that was just here what we took out of factory overhead. So that's our credit to factory overhead. And so what that means is we still have $5,000 left in our bucket that really should have gone to our cost of goods sold. So we need to add $5,000 more to our cost of goods sold. All right, so that is our journal entries. And so part 3 wants us to prepare a schedule of cost of goods sold. So this one's going to be a little bit simpler than we did in problem 14. So we've already done the work up here with our journal entries. So we just want to start with our direct materials used up here, 455. Our direct labor use is up here at 340. Add in our factory overhead that we applied right here for 170. So add that up. So we have a total manufacturing cost of 965. We want to add in our work in process from the beginning, and so that was up here for our 121,000 we started the month with. And then we want to subtract out what we ended with. And so what we ended with was just that job that we didn't finish, which was job 308 of the 257,500. Subtract that out, and that's going to give us our total cost of good manufacturers of 828,500. And hey, that actually matches what we moved over to finished goods right here. And so in the next section, it just wants us to prepare the balance sheet, the inventory section of the balance sheet. So if, it asks us to calculate gross profits. Told us we had our sales. We just sold that one. We sold job 306 for 635,000. It cost us 326,000. That was up. Oh, that's right. So that is going to be our total cost of the job, which is the 321, plus that extra $5,000 that we had to add in over here. Gives us 326,000. So it gives us a gross profit of 308,500. So, and then we have our inventory balances, and so our inventory balances. So it says we started off. Whoops. Yeah, so we started off with 80,000, and then we just want to plug in all our journal entries here that related to raw materials. So we add in the 500, we subtract out the 455, subtract out the 50, and that should give us our 75,000. Our work in process, and so we just have one good that we're still working on. That's job 308, so that's our 257,000. And then our finished good, which is the one that we finished, but it's not sold yet, so that's going to be job 307, which is going to be 507,000. Gets us to an ending inventory of raw materials, work in process, and finished goods of 839,500.